Elizabeth, thank you so much for joining us. Clearly, Americans are shopping because they're going out more, but you're seeing higher growth rates than other retailers. Why do you think that is?
Well, first of all, Sarah, great to see you. Thank you for having me on again. Yeah, I mean, we really have seen broad-based strength across the board. Our men's, women's, kids, UK businesses, we've had, year-on-year, quarter-on-quarter strength in terms of our success rates with our clients. We're bringing them what they want. And clearly, the category is absolutely coming back. But people are coming to Stitch Fix. I mean, we have seen record client growth and additions for the last several quarters. And this quarter, we added 230,000 net new clients. In these first 3 quarters alone of fiscal 21, we've added more than any full year on record since fiscal 16. And I also think it's our product innovation. A lot of the things that we've been working on are starting to really deliver. We've brought this new Fix preview experience to half of our US clients. It's fully rolled out in the UK. We've added new features to our new direct buy experience. And those things are really starting to pay off. And consumers just want to shop in this new way online. And with the category overall shifting online, we're really taking advantage of that as the new way to shop.
You guys talked a lot about what consumers are buying. Mini skirts up 80%, rompers and jumpsuits up double digits. Men are buying shirts again to go to work. Jeans are back in. Does it matter to you? Is that an improvement in your financial performance, given the type of clothing we're buying?
Yeah. That is a great question, Sarah, and I know you have tried Stitch Fix before, and one of the things we pride ourselves on is really matching the consumer with what they want and using our data to trend spot these signals. And so we're really agnostic. The power of us understanding ahead of time what people are putting in their fixed note requests. To your point, we've seen button downs trending in our men's clients. We've seen more requests for clothes that are relevant to going out, 300% increase in vacation requests from our women's clients. But we really have a broad-based assortment, and this trend towards active and athleisure, that's still our highest growth category. But we would anticipate that's going to start to decelerate as consumers want to go out again. They're going back to work. And for us, what we're lucky, we've got this signal of the client notes. We've got the signal of people playing Style Shuffle. We have 7 billion data points in Style Shuffle. And all of these different sources allowed us to lean into the right inventory at the right time for each one of our clients.
We've got it on the bottom of the screen there saying scaling back on sweats. We saw that in some of your data and your comments. Is that because of the season and because of the weather, or because of the style and the factors you're saying, people going back to work? They're okay for Zooms, but they're not okay for being in the office.
Yeah, it's interesting, Will, on that question, because consumers are actually saying they want to be a little more comfortable, but they are going back to work or they are going out again. So we still hear from our women's clients, 70% of them want to see activewear and athleisure, but that growth rate for us has just been astronomical. So it's still growing, it's just decelerated. And the requests that are growing faster now are the ones for things that are related to going out, bright seasonal colors we're seeing particular strength with, the idea of a little bit more structure, words like blazers are coming back, or words like dresses. And so I think people are still going to be in this hybrid work mode, and we're anticipating athleisure is here to stay. But we also think we're going to see a real surge in these product categories that really took the back seat for the last year, and people are excited to dress up again.
You do not need to wear a miniskirt to Zoom. People are going out.
Me personally, or
you or anyone else? Elizabeth, if you had to pick one thing that was a disappointment, net revenue per customer did decline, I think 3.4% from last year. What's driving that? Is that the new customer not spending as much?
Yeah, that's great. We actually weren't disappointed by that. It grew quarter on quarter, but really the way we calculate that is a trailing 12 months, and it's divided by our total customers. And our customers have grown so much, and many of them are new on their spending journey. So it's actually exactly what we anticipated. And because that denominator has been growing so quickly, it's kind of the natural thing you'd expect to see in terms of that average spend. So it's really just a sign of where people are in their life cycle. And one of the things we're most excited about is the impact that direct buy is having with each of our customers. So one of the things we mentioned is that we're seeing each new cohort of client kind of within those first 30 days spending more with us, opting in earlier to direct buy. And so that's actually the signal we're most excited about, is getting way more people to Stitch Fix and getting them to experience our entire ecosystem.
Shepard Smith here. Thanks for watching CNBC on YouTube.